over the last year. Can you believe this has been 1 year? And so a lot of folks wanted to make sure that their members got the information. We will be recording today's presentation, and so there will be a copy afterwards. So ask those good questions. We got some complex topics, and if you need to go back and listen to it, it will be available on the San Diego Regional Chamber of Commerce YouTube page. So thank you again to the Chamber so much. I want to give a shout out to Jerry Sanders, President, my always forever mayor of San Diego, and the work that they do at the San Diego Regional Chamber of Commerce, and also to Katie for having put this together, and Stephanie Bienvenuto for her work and her leadership at the Chamber, always making sure that these tax webinars are available to you and your clients, so that way you're the most accessible here in San Diego County, always thriving and making the most for your business. Also, for our co-sponsors today, we want to thank the San Diego Economic Development Council from East County for their partnership, the San Diego County Lodging Association, the San Diego chapter of the California Restaurant Association, BOMA San Diego, the Asian Business Association of San Diego, the San Diego Downtown Partnership, the San Diego County Hispanic Chamber of Commerce, the San Diego East County Chamber of Commerce, the Pacific Southwest Association of Realtors, and the North San Diego County Realtors for their partnership and making sure that we are getting this important information out to the business community here in San Diego. My name again is Jordan Marks, and I am the taxpayer advocate for the San Diego County Assessor Recorder Clerk's Office. And we all have the pleasure from this great panel of working for this amazing leader and elected official, Ernie Dronenberg, the man with the bow tie, first elected in 1978, actually the same year Prop 13 passed. And I know for a lot of you out there, you love Prop 13. I think for some of us on the panel, we love Ernie because we all get to work for him. But he's actually elected president of the California Assessors Association for 2021. And so he's advocating for taxpayers at the state level on behalf of the 58 elected county assessors. And that's going to come into our conversation today. And also he authored the Taxpayer Bill of Rights. And I'm going to talk about that in a moment. He's a veteran and a flower farmer, a small business owner like many of you here in San Diego County. And that is what makes us be so proactive in helping the small business community. As I mentioned, Ernie authored the California Taxpayer Bill of Rights at the state of California. And one of the things that he did there was create the Office of Taxpayer Advocate. And so when I came on board, he said, we need to have an office here locally in San Diego County. And I believe we're actually the only county assessor office in the state of California that has an official taxpayer advocate office with our job of ensuring fairness, providing education like our partnership that we have today with the San Diego Regional Chamber and our co-sponsors, and correcting systemic issue. Our office is always seeking to be the best, and we know that we can always do that with your partnership and becoming better. Let us know how we can always improve. And today on the call with us, I want to introduce on our panel, we have a tremendous amount of experts. You know, some folks like to say they have over 100 years of education. Well, I will tell you, each of these folks in their own right are seasoned 20+ year professionals, having made this office as taxpayer friendly and successful, reaching fairness on a daily basis. I'd like to introduce Jeff Olson, our Chief Deputy Assessor, heading our assessor team. Claudia Urbano, our Division Chief for the Real Property Valuations. Ray Kim, Division Chief for Assessment Services. Omar Castellanos could not be with us today. He's the Division Chief of the Business Personal Property Taxes, but I will tell you, we are lucky to have his leadership on our team. And so if you have questions and you're calling in about your business personal property tax afterwards, that's going to be your point of contact. Albert Tapia, our Division Chief for Commercial Properties, and Robert Vaughan, our Division Chief for Business Audits. So really, we have the best here today to help you. Before we get into our presentation, I just want to kind of do a quick review of what we do here at the Assessor Recorder County Clerk's Office. It's kind of 3 offices put together. And the reason we want you to know what we do is because on any of our areas, we want to be the most helpful to you. So that's the assessor side. We appraise all real and personal property here in San Diego County. We do over 1 million parcels annually. And I'll tell you, last year we set a record high, saving taxpayers over $230 million for our homeowners, our disabled veterans, charitable organizations, and nonprofits. You know, when we talk about helping the homeless, we play a role in doing that. So if your organization could use some tax relief and you're a nonprofit or a school, call us. We're here to help you. In addition, we actually do 70,000 plus business personal property tax accounts, planes, boats, and yes, even penguins. Once a year, we get to go to SeaWorld and we chase the little penguins around. No, we don't chase penguins around. But I got to tell you, Albert and his team does a really good job on igloo appraisal. They've got it dialed in. Next to the Eskimos in Alaska, we got a pretty good team that does that. In addition, we're the recorder. We do vital records, birth certificates, death certificates, marriage certificates, deeds, and liens. And so those all play a role in the functioning that you do in your business. And so if you need help with any of that right now, we are here to assist you. And then also the county clerk does marriages. So on any given year, we issue about 25,000 marriage licenses, and we perform half the ceremonies here at our office. And so if anybody tells you they're running to the courthouse to go get married, say, no, you're going to the wrong spot. You got to go to the county clerk office. And in addition to that, we do fictitious business names. And I'll tell you, when PPP came out, that played a really important part on getting your fictitious business name information to qualify for those federal programs, and even with your banks and your loan negotiations. So right now, due to the pandemic, the county health office has closed our over-the-counter service. We're hoping to open up, probably looking towards the June time. But in the meantime, if you need help with any of that and it's an emergency to your business, please feel free to contact the Taxpayer Advocate Office. I'm here and the team is here to help you. And that's what we're about. Number one, great customer service. Two, being a financial steward with your money. We return over $3 million back to the county from our budget every year. We actually want to meet you where you do work. San Diego County is a big county. We have 5 regional offices that we've opened up. So that way you don't have to drive downtown. And I'll tell you, our boss lives in Fallbrook, so he appreciates not having to drive downtown, but he can go to our San Marcos location for help. Also, I'll tell you, over the last couple of years, our office has made it a priority to move you from inline to online. And that was pre-pandemic. So when the pandemic hit, our online services were key to making sure that your business continued, which also led us to be the environmentally green assessor. We saved in our environmental processes over 1 million pieces of paper annually from printing. We print less paper every year because of online services. And so not only are we the going green assessor office, but we're going to save you green too. We've even looked at our processes and reduced your fees. So before you used to pay $2 for every page from a property tax information or a property description. It would be $2 for each page. Now it's $2 for the first page and 5 cents for each additional page. And I know Katie's like, well, $1.95, that's nice. But if every part of government saved you $1.95, you'd be a thousandaire. And it's not winning the lottery, but this goes to the bottom line of your business, and we care about getting to right and fair amount. And that's what we're going to talk about today. So we're going to jump in here and talk about Proposition 13. Proposition 13 is something that you need to understand. It's the foundation of our property tax system before we get into property tax relief from Proposition 8. And so in 1978, an agreement was passed between you and the government. The voters said, hey, we need to have a limitation on property taxes. And you, as the voter, said, I agree to pay 1% of my assessed value, or what we call the purchase price in a fair and open market transaction of my property that I purchased for the life of the ownership, with an up to 2% increase per year. So let's say Katie decided, hey, I'm going to go buy a property, and she bought it for $100,000. Well, she agreed to pay 1,000 or 1% in property taxes every year. And the next year, it could go up to 2% of that in the assessed value, or $20 to $1,020. And that is the foundation of our property taxes system that makes it affordable, budgetable, and predictable, and such a joy to own property here in the great state of California. Just for some of you that are the visual learners, I'm going to have something for you in a moment. But after Prop 13 passed, Katie, the property owner, said, hey, Jordan, what happens if my property value goes down? I know every realtor you meet is going to be like, no, it only goes up. Just hold on to it, I promise. It's true, the market has appreciated over time. But Proposition 8 was passed by the voters right after Prop 13. And it basically said, hey, if the property value in the market goes down below your assessed value, that's your purchase price in a fair and open market transaction, at that 2%, we can actually lower your property tax. And so that's what we're going to be talking about today, Proposition 8. And that allows you to file an application with our office. And the filing period is December 1st to April 30th, where we can go in and say, does the market value reflect an amount lower than your assessed value? And so if that is the case, we can lower it. I just want to show you for the visual learners what that looks like. So here's Katie buying her property for $450,000. Congratulations, Katie. The next year, boom, it went up to $600,000. Now, Katie's like, I don't know how to budget for that huge increase, but don't worry, Katie, Prop 13 locked it in. That's that black line. And so otherwise, you'd have a $1,500 property tax increase the next year. But as you can see, the market took a little bit of a hit. Not like we've ever seen that, right? 2009, 2010. And so when that amount, that red amount there is below the assessed value, we lower your property taxes, or that 1% to be based on that lower amount. But it can increase with the market. And so some people get confused. They're like, well, it can only go up 2%. That's true. That's that black line cap, that smooth line that you can budget on. But when we return it with Prop 8, it can come up with the market, never to exceed that Prop 13 cap. And that's that star that protects you. So even if the value of the property goes up above the assessed value and that locked in Prop 13 rate, you're protected on an amount that you can budget, predict, and afford. And so where do you find your assessed value? That's the number one question we get. So that way, for today, you're going to want to look at your assessed value and say, okay, is this amount lower than the market or greater than the market value? That's going to be on your property tax bill in the top right. So for today's presentation, you're going to want to look at that total L&I, land and improvement value. On this bill, it's $259,993. Or Katie's running the numbers at 1%. That's about a $2,500 tax bill. So even if the property is worth $1 million, you pay based on that $259,000. But what we're going to look for today is if that $259,000 number is greater than the current market value of your property, and then we're going to be able to deliver you relief. And so I'm going to turn it over to Jeff Olson now, and he's going to walk us through the application for Prop 8 review and assessment to see if we can provide you property tax relief due to COVID-19. Thank you, Jeff.
Thank you, Jordan, and good morning, everyone. My name is Jeff Olson. I'm the Chief Deputy Assessor. I've been with the San Diego County Assessor's Office for 32 years. I can see some of you shaking your head. Yes, I really was 5 years old when I started at the office. I appreciate you recognizing that. But what I'd like to do today is talk about the application for a review of assessment. And Jordan, could you move forward on a screen? There we go. Perfect. So this is the application for review of assessment. Jordan when talking about the previous slides, said something really important. The assessor's office can only reduce values if the market value, what the property is worth on the open market, falls below your assessed value. So let's say, for example, due to COVID restrictions, your market value of your property has decreased. We can only give you a property tax reduction if it's decreased below what you're being taxed on. So if you're being taxed on a value of $700,000 and the property actual market value has gone from $1 million to $900,000, you're still in good shape because you're only being assessed at $700,000. And so that's something important to understand and consider when filing this application. So this is where you start the application for review of assessment, where it asks for the particulars, the owner, the mailing address, the parcel number. Now, frequently we will have one property that consists of multiple parcel numbers. We call that an economic unit. If you have a property that is made up of a number of different assessor parcel numbers, we need to collect all of those parcel numbers. So what I would ask is that you put the first number up on top in the boxes where it says parcel number, and then about 3/4 of the way down, you'll see lines for remarks. List any additional parcel numbers that have to do with that same property in that remarks section. Now, obviously, if you have different properties, let's say you have one in Little Italy and one in El Cajon, you'll want to fill out 2 separate applications for those properties. So here we get the specifics, the owner, mailing address, address of the property, and parcel number. The value on the current assessment roll, that's the value that Jordan was just showing you on the property tax bill. Total L&I, total land and improvement. That's where you would get that number. And if you feel that number is too high, what do you feel it should be? What do you think that the market value of the property? In other words, if you were going to offer this property for sale, how much do you think it would be worth on the market? That's what we're talking about for market value. And we're looking at the value as of January 1, 2021. That's what we call our tax lien date. That's the valuation date for the tax bills that come out in September of 2021. Now, there's a couple different ways you can get to market value, or a couple different ways that you could substantiate a reduction in your assessed value. One is comparable sales. And many of you are probably familiar with that idea that your property is worth what similar properties would sell for. If you have a commonly traded property, you could certainly, and you're aware of comparable sales in your area, or if you have a realtor that you can speak with regarding comparable sales for your property type, you can certainly list those in this box. And you'll notice that we're looking for sales specifically between October of 2020 and March 31st of 2021. Now, I know it's been a challenging year in the commercial real estate market, and we are really looking at commercial properties this year because we all know residential's going with gangbusters. And so it may be necessary to go back further than October 120, but in any case, you would never want to go more recent than 3/31/21. For properties that don't have easily discovered comparable sales, if you look at the bottom of the top paragraph of this application, it says, for income producing property, please provide a rent roll as of January 1, 20 and January 1, 21, income and expense statements for year-end 2019 and 2020, and a 2021 budget. Income producing property is different than valuing a house per se, because typically the motivation of a buyer is not to live in it, but to rent it out or to produce an income from it. And so if it's a property that's been traded, you can certainly look for comparable sales. But we're really quite interested in this income information. The more information you can provide to us, the better. And so you'll fill out this application. On the bottom, make sure to give us your signature and your telephone number. And what will happen is our determination of these values will actually be placed out on our website at the end of June. Could you move to the next slide, please? Now what we're going to do is have Albert Tapia, our extraordinary commercial valuation chief, go into a little bit more detail as far as our commercial valuation methods. So you get a better idea of what we're looking for in doing these valuations. Thank you, Albert.
Thank you, Jeff, for the introduction. Hi, everyone, and good morning. I'm going to spend a few minutes here discussing the next few slides and discussing how we evaluate commercial property for tax relief, and also providing you an example, a simple example of the tax savings, and also defining what a possessory interest is. The commercial valuation process for commercial real estate will consider the 3 primary approaches to value. As Jeff mentioned, the sales comparison approach, which is looking at comparable sales, the income approach, and the cost approach. Our office will consider all three approaches when reviewing the 2021 Proposition 8 applications. We'll look at those approaches, reconcile the value indicators, and depending on the availability and reliability of the market data, we'll conclude to a market value. And I just want to spend a few minutes defining those approaches for those that may not be familiar with those concepts. The sales comparison approach, the appraiser will estimate the market value by comparing the subject property to comparable properties that have recently sold. In the application itself, the Prop 8 application, we're asking that you provide comparable sales if you have any. We are limited to comparable sales that have sold between, and actually ideally we want it as close to the valuation date as possible, which is January 1st, 2021, but we have a 90-day limitation after the valuation date. So if the sale, if the comparable sale took place after March 31st, 21, and then we cannot consider it in, for this year's valuation. As far as the income approach, the appraiser will estimate the market value by converting an income stream into a present value estimate. There are several methods and techniques used by our appraisal staff: income, rent multipliers, direct capitalization, discount cash flow analysis. I'm not going to get into the mechanics of each technique, but if you'd like more information, I encourage you to visit the Board of Equalization's website at boe.ca.gov. There you'll find the assessor's handbooks that explain the valuation techniques and all the procedures and guidelines we have to follow. And lastly is the cost approach. The appraiser will estimate the market value of property by estimating the cost of improvements, then reducing the estimated cost by the amount of depreciation and adding the estimated land value. As mentioned earlier, all three approaches will be considered in valuing your property. In addressing potential loss in value due to the COVID-19 restrictions, please note that it's not a dollar for dollar adjustment. If your net operating income declined by 50%, it doesn't mean your property value declined by 50%. Our office will determine the loss in value by analyzing the market data and utilizing the three approaches to value. Next slide, Jordan, please. Here we have a very simple example of the potential tax savings due to a Proposition 8 reduction. In this example, the market value of the property as of January 1st, 2020 was $1 million. And if the market value declined to $800,000 as of January 1st, 2021, you may be eligible for a temporary reduction if the assessed value is greater than the market value. In the numbers below, we'll display that for 2020, this property owner was not eligible for a reduction because the market value exceeded the assessed value. However, for 2021, as you can see, the market value is now below the assessed value. So there is a potential adjustment of $88,254 in the assessed value, which equates to roughly an $882 tax savings for that year. And I just want to spend a few minutes on defining what a taxable possessory interest is. The concise definition of a taxable possessory interest is the right to possess and use publicly owned real property. The most common example of a possessory interest is the interest created by a lease. The tenant has possession during the term, the landlord receives rent during the lease term and regains possession after the lease terminates. Possessory interest is also entitled to Proposition 8 reviews. And the assessor will review market rents, the lease term, and if there are any concessions since the original lease was created. Documents that we need. So again, many of possessory interest parcels are income producing properties. So we would need the income and expense statements for 2020 and also the budgeted numbers for 2021. In addition to that, we would like you to provide the actual lease and if there has been any amendments to that lease. Common examples of possessory interest counts, as you can see in the slide outlined at the bottom there, that's Seaport Village. That's one of our iconic properties here in San Diego County, and that's a possessory interest. Petco Park is also a possessory interest, and so is SeaWorld. So those are a few examples of our iconic possessory interest properties.
Hey, Albert, this is Jordan. What if somebody's renting from a government entity like a UCSD or a tribal government like Sequan? Would those count as possessory interest lease?
That's correct. UCSD is a public institution. So if there's a lease agreement where you're leasing real property from those agencies, that is a possessory interest.
And I know before in your first example, you talked about the commercial property owned by the owner of that property. This is a different type of leasehold interest owner, so that may be seeking relief. Are PIs evaluated annually, and is that why they may be more open to relief than maybe a property that was bought in 1978, right? Something that's been owned for a long time?
That's correct. The possessory interest accounts are reviewed annually. And the reason why is because there's a declining term. Due to that declining term, their potential can be an adjustment to the value.
So many of our hoteliers that have stuff on that port land and that Chula Vista down there, and even I think those airports, right, Carlsbad or Borrego or any of those properties, those are folks that should be looking at their leasehold interests and seeing if there's relief there.
Yes, they would need to file the application and provide us their income and expense statements if they have that, if it's not an owner user property. Also provide us any information regarding their lease, if there's been any modifications to it, the terms of the lease.
Yeah, and one of the things that I think that we saw when we were looking at these possessory interest lease is that they tend to be structured a little different for everybody. So that information pertaining to their lease, for example, it looks like if the government agency is getting some percentage of the profits that come in, that might impact the value of their lease. So getting as much information as possible up front is probably as helpful to you and your team to getting the taxpayer as much relief as possible in this process. Is that fair to say?
That's absolutely correct. Yeah, all these leases are structured a little differently, and in some situations, we do need to rely on the revenue the property produces.
Thank you so much, Albert. That was a great review of the PIs. And
thank you, everyone.
And I think up next we have Robert Vaughan, and he's going to be going over the business personal property taxes. And Robert is one of those amazing experts that we have. And so Robert, I'm going to turn it over to you now.
Good afternoon, everyone, and thank you, Jordan. This is Robert Vaughan. I'm with the business personal property side with the audit section. And I'm going to be talking a little bit about COVID relief and some filing deadlines and some other important information. And I'll just start with the COVID. And the assessor this year is going to be proactive with COVID relief due to inutility of personal property, mostly based on COVID-19 restrictions. And the good news for your business is there's going to be no formal application required. We have the information on what type of industry you're in and a pretty good idea of the COVID-19 restrictions that were put upon you. So I'm sure you're going to have some questions on that. So I welcome those at that time. some of you are asking, well, what is business personal property? And business personal property includes all costs of property other than real estate that are used for your business purpose. And some examples include your basic machinery and equipment, your office furniture and fixtures, your computer equipment. And the example does say software, but I do want to let you know that software is excludable. So please, if you can segregate out your software costs, that you do not want to report those costs. Also, supplies are assessable costs. All those supply types that you use to keep your business running, you know, to include your office, your janitorial, salon, spa, and the other types of supplies. You know, we also have on the example leasehold improvements, and on the business side for leasehold improvements, it's those fixtures that are specifically related to your business purpose. Those are just some examples. You do want to keep in mind that your business inventories, personal effects and household items and pets are excluded from the definition of business personal property. Okay, and the way we typically assess business personal property is at replacement cost new, less depreciation. So Prop 8, you know, does not apply to business personal property. And next slide, please. And we have a really good example here of what the COVID inutility would apply to. And this would be a, you know, a popcorn popper at your typical movie theater. And, you know, the example here is for a popper that was purchased in 2019 for $1,000. You know, normally for lien date 2021, we would assess that applying a depreciation factor, which would probably be about 0.90, 0.92 in that range. But, you know, with COVID restrictions, we know that the movie theaters were mostly not operating, you know, here in California since March, you know, so we have 8-9 months or so of where that popcorn popper was not able to generate the revenue that they were hoping. So there is a temporary obsolescence issue for that, and we will be reflecting that in the value. So this is just one example of that. Next slide, please, Jordan. Okay, so how do you account for PPE, temporary plexiglass, et cetera? So we're hoping that we can put a little smile on your face. Of course, not as much as the our friend in the picture here who has probably 10 years plus supply of paper, but you know, the PPE that you did have to expend costs for the COVID period, for, you know, your masks, your sanitizers. Again, the example shows the plexiglass. We know a lot of costs were expended for the outdoor tents. You know, those costs that were expensed or capitalized, you will not be required to report those to us. They will be excluded from assessment during the pandemic period. So just keep in mind, you know, it's possible that the example for the plexiglass, you know, that could be, you know, very expensive if you're outfitting a large restaurant, and it's possible that cost was capitalized. You know, after the pandemic period, if it's still in place, it would at that point become assessable. But during the pandemic, all of those types of costs are excluded from assessment.
So Robert, it sounds like the person that ran out and stocked up on that year's supply of toilet paper, they're still going to have to pay business personal property tax on that, because it's not a PPE or a COVID necessary tool, but
That's right.
it sounds like some good relief is coming there.
You know, we do assess janitorial type supplies, and you know, when you've got a 10-year supply and the pandemic ends after a year, that's right. Assets, they will be moved back into being accessible.
Just make sure your accountant doesn't multiply that TP stockpile by 12, and you don't overpay on that amount. So.
That's right. Next slide, please. So just some important tips, you know, that I'd like to go over with you to remember. First is, you know, on the form that you receive is to please verify that the form has the correct owner, site, and mailing address. And if there are any changes, you can update those directly on the form. If there's been a name change or a situs change, where the business moved during 2020, or a mailing address change, please go ahead and update those on the form for us. The next one's very important, to report your equipment under the correct categories to receive the best depreciation. One example I can give that's very common is computers that are often reported with office equipment. And office equipment has a much slower depreciation than computers. So you end up overpaying for the computers if they're in the office equipment category. Also, again, as I mentioned earlier, with computers is remember to exclude that software cost. Next is to make sure to report original cost and always include sales tax, freight, and installation. You know, as an auditor, a good way for you to report correctly is a good source is your federal depreciation schedule, which includes, you know, the original cost, sales tax, freight, and install, or your internal fixed asset listing. Next is to dispose and write off of old equipment and do not report it in the effective tax filing year. The important thing to remember on old equipment that was disposed of is to make sure you remove it off of the statement. We see a lot of times that old disposed of equipment will continue to be reported along with the new equipment that replaced it, therefore resulting in a double assessment. So that's very important as well. Also, to file a separate return for each one of your business locations. So, you know, if you have 3 or 4 locations and we do send you 3 or 4 property statements, please fill out those statements as we send them out. There are times where businesses will lump all of their costs onto one statement and send it in. And we'd appreciate if you would just fill out each one for us. And very important too is to attach additional notes or information if you have a unique situation. And I would say probably the most important area for this is leasehold improvements. If you've had a big improvement addition, if you could supply us with the situation that will help us to determine if it's structure or fixture, so we can assess that correctly for you. And lastly, to double check that you have signed and dated the 571L. And next slide, please. Okay, some important deadlines and key dates. The business property statement 571L is due by April 1st. To me, more importantly, is the May 7th due date. You know, if you're not able to get it in by April 1st, but you do have it postmarked and sent by May 7th, you will not be penalized. But this year, May 7th falls on I believe it's a Friday. So any statements postmarked May 8th or after are subject to a 10% penalty, and we don't want to have to apply that. Another important date is May 31st. It's the last day to amend a statement. And this is important because there are times, for example, if you had a large piece of equipment that you disposed, say, in December of 2020, say for $100,000 of cost, and you figured that out after you filed the original statement, well, you can then deduct that off and file an amended statement, and your taxes will be reduced correctly. August 31st, very important. That is the last day to pay the taxes without a penalty. And then October 1st is the last one, is that liens are placed on business unpaid taxes.
Robert, one of the questions we often get is, hey, I don't have any business personal property tax, but you sent me the form. Do I still have to file it anyway?
If you were sent the form, that basically is a request from us to complete the form and send it in. And then most likely what will happen, if it is below our billable threshold, the subsequent year, you will not receive a property statement.
But it sounds like you still have to file even if you think you might be below that threshold, because the state requires us to have some audits regardless. And so, you know, for a lot, I get a lot of calls from small business owners that didn't file, and they're like, hey, I don't have that much. And unfortunately, it sounds like we have to make some assumptions based on common practices in the industry if we don't hear from the property owner. So we highly encourage everybody to file, especially, I just want to point out again, it's something that you pointed out, Robert, which I really appreciated. There's a 10% assessment penalty. That's on the assessed value. And then if you don't pay the bill later, there's a 10% tax collector penalty on the actual tax measure. And so we want to make sure, I think there's over 10,000 accounts that just don't file, that unfortunately we have to put that 10% assessed value penalty on. And we'd rather not, we'd rather account and reach that exact amount. So as businesses are trying to reduce their taxes, filing helps us reduce your taxes. The more accurate information we have filed in a timely manner helps us save you money. So please help us up front, because we're really trying to get there to make it as affordable for you to operate in California as possible. And so I want to thank Robert so much for going over that. And we're going to jump into a couple of more presentations, and then we're going to take questions at the end. So hit that Q&A box as we go along, and then we're going to open up for questions from the audience afterwards. Thank you, Robert. And now I'd like to welcome up, I believe Ray Kim is going to be taking this one.
I will, Jordan. Good afternoon, everybody. My name is Ray Kim. I'm the Division Chief for Assessment Services. So the next question everybody might be having is, I provide all this information, I file the application. How do I find the results of the appeal for my property appeal? So on July 1st, on our website, we'll be listing what is a notification of your 2021 taxable value. So if you go on there, you'll see what your factor base value is. What the factor base value is, what your base value is factored to the present year without any type of reduction from an appeal. But then also on the sheet, if you are granted a reduction, you'll also see a column, as you can see on the screen, the 2021 taxable value. So we're emphasizing getting information. Most of these appeals primarily are going to be, I would say pretty much all of them will be commercial type properties. As we all know, COVID has greatly impacted a lot of different sections of commercial real estate. So this is, our main purpose, to communicate to you, to see how you could give you some relief. And the best way to go about this is, of course, file the appeal, but also important is, getting the information from you to enable us to do a full analysis to make a reduction if it's warranted. And this would be reflected on the notification of the taxable value. So, the next step is, you look at the value, and an ideal situation, the information is provided to our office. We make the adjustment and you're satisfied with the reduction. But there's also going to be cases where we make the reduction or you don't get any reduction and you want to further appeal. So you do have that right to file an assessment appeal, and that'll be heard probably, several months up to a year afterwards. So, what we're trying to do is give you immediate relief. The best way to do this is to get information from you, because once we do these property appeals and it's reduced, it will be reflected on your tax bills that are due for the upcoming tax year. So, the present worth of money is, there's value to that. So we want to try to give you as immediate relief to reflect what the decline in on your property is. So that's why we're asking for the information. So, it's kind of once we get the information, it's first received, first reviewed. And the more robust information that we have on on the information that Albert requested, we'll be able to do a more thorough review. So, that's how you'll be able to be notified of your value. Like I said, it's, providing the value information is a win-win situation. We review the information, we're able to give you a reduction. And if you're further not satisfied with it, you do have further recourse. But in the meantime, if we're able to give you a reduction, it does give you more immediate relief on the upcoming tax bill, and which is what we want to do, as to partner with you to reflect the market value of their property if it was affected by the pandemic.
So Ray, it sounds like this is the more informal, easier way for us to get the folks the fastest relief in this part of the process. And it's a partnership, it sounds like, right?
It is, Jordan. Yeah, we are trying to get give more immediate relief, because what happens is if the property value is not reduced in this fashion, then the taxpayer will have to file an appeal, and the appeal is going through the assessment appeals process could be a long, drawn-out process. They have a heavy schedule, and a lot of the hearings are being done virtually, so there's a bit of a backlog. So if you do file an appeal, it will take up to 6 months to a year for that to be heard after the application's filed, after the application filed period opens.
So this is step one to the fastest way of relief, but then also taxpayers have a secondary backup in case they feel, hey, that amount may not have been what I thought it should have been, and they can take it to the assessment appeals where we can continue the conversation. Because it seems like a really short period to digest a lot of applications. Is that right?
It is. So, I mean, our commercial staff that's going to be reviewing these applications, they're going to be very busy from now to the close of the roll. So they're going to be juggling a few functions. What would make it easier for them is to get the information to make a reduction if it's warranted. I mean, because of COVID, the number of sales that they could use as comparable sales, it's just not really out there right now. Add to that, most commercial properties, we look at the income approach as a primary method to value it. So it's important, especially for the type of properties where business income is a great reflection of what the value is, such as hotels or other types of properties, or if there's a commercial property where there was some type of concessions that had to be given because of the restricted access to some properties. So that should be reflected in the valuation, and we'll look at that.
Just to recap again for folks what Ray was hitting on, we're going to have a lot of applications, and the actual results of the reductions or the review from the team is going to be posted on July 1st on our website. Or for the business personal property tax, they should call the division directly after July 1st, because that's the close of the tax roll. Is that right? That's when our taxes are put
That's
forward.
correct. Yeah. We close the roll in June, and then we'll have the taxable values on our website. So you'll be able to look at your upcoming taxable value for the 21 taxable year. So you will have to look on our website. We do not send these out. There's over 1 million parcels in San Diego County. We want to be friendly to the environment, so we're trying to reduce our use of paper. So you will have to go onto our website to check your taxable value.
If anybody has any issues, be sure you can call us. We have a great call center, and we're going to help you reach that if you can't find it online. But most importantly, once that period closes, the next period of the assessment appeals opens. So it kind of makes sure that we're protecting taxpayers at every level in their ability to reach the fair amount.
That's correct, Jordan. Yeah, they'll be given notice of our informal Prop 8 process, which we're discussing now. And once they see their 2021 taxable value on there, and if they're not satisfied with that, yes, they do have another level of appeal that they could go forward on. But our goal now is to get the information.
Continued conversation at that point, if necessary, if we were able to.
Yeah. Well, ideally, the ideal situation, George, is we get the information, we make the reduction, everyone's happy, and there's no need for an appeal. But if
that's where we want to be, that's right. Thank you so much. We're going to bring Claudia in to wrap us up, and then we're going to open up questions for the panel from the audience. Claudia, how are you doing?
Good morning, everyone. I'm I'm Claudia Urbano. I'm the division chief over our realty section, which is over the residential and commercial industrial sections. I just want to go over some reminders, just want to kind of recap some reminders and some recommendations to submit your application for review of assessment no later than April 30th. We recommend that you submit your application as soon as possible and not wait until the last day. The applications for review of assessment are available on our website. We have 2 links listed on this presentation. The first link is for the fillable PDF form that you can complete, print, and mail with your supporting documentation. The mailing address is also listed on this presentation, is San Diego County Assessor, Recorder County Clerk, 1600 Pacific Highway, room 103, San Diego, California, 92101. The second link listed is for our electronic application. Once you submit your application electronically, please email your supporting documentation to arcc.fgg@sdcounty.ca.gov. Please, in the subject line of your email, type in Prop 8 in there when you send that in. That'll help us to facilitate to make sure those Prop 8 application documentation, supporting documentation are directed to the correct staff. And again, as Ray had discussed, the results of our assessment reviews for real property and possessory interests will be available on July 1st on our website at www.sdarcc.com. Look for 2021 notification of taxable value under Assessor Services. For the business personal property, please call the Assessor's office at 858-505-6100 on or after July 1st. So again, just encourage you to submit your applications. The earlier you can submit them to our office, that will help us, and also attach the supporting documentation. That is very important. We need to have that supporting documentation attached to those applications for our staff to be able to complete their reviews of these properties. Thank you.
Claudia. And I think you emphasized it. We want to say it again. The earlier you apply, the more time we have to give your case the review and the time that it deserves. So apply early. The 4/30 deadline is a last date, not the when we should tell you, not the date that you should apply. If you can get in there now, let's get it done. Is that?
Yes.
So thank you again so much. We're going to open up for questions and answers. And I just want to thank the team. I wanted you to meet our great panel of experts. These are the folks that a lot of you work with right now, and we want you to be familiar with their faces and their great positive attitude towards working with taxpayers. But also our office is trying to be as proactive as possible. We really went out and we mailed out thousands of letters and thousands of applications to you. So that way, and we put together today's event with the chamber, so you have that opportunity to be as successful in your application process as possible. And so we're expecting thousands of applications to come back in. There is the contact information again. We're going to send out the slides to all of the participants, so you have those. And I just want to remind you some key things that I heard on the presentation. If you're curious about the state rules on property taxes, go to boe.ca.gov, and the State Board of Equalization, which is the agency that writes all of the property tax rules, they have those there for you. The operative date that we're working from is the January 1 lien date. That's the date that the state allows us to start providing you relief. And we're looking at 90 days before and 90 days after. That's the operative timeline for you to look for those comparable properties. And so without further ado, I'm going to stop sharing on our slides and we're going to open up to some great questions from the audience. And so I'm going to look in the Q&A box, and we got a question here from Wes Nichols. And I believe Wes is with Paramount Property Tax Appeal. They're one of our frequent representatives here at the Assessor's office. We see them working with a lot of property owners. And his question is, what's the discount rate and term that you'll be using for in-utility adjustments? So that's the obsolescence questions for the movie theaters. And I think he represents a few movie theaters in town. So I'm going to turn that over to Robert Vaughan. Would you like to jump in and answer that question, or anybody else that feels that they can help out with that answer?
Yeah, hi, Jordan. I think as far as the discount rate, he's talking a real property question, but for the in-utility for the business personal property, at this time, I don't have an exact percentage for him, but it's going to be significant due to the period of time that they were forced closed.
Okay, great.
I can add
How about on the real property side? Jeff, go ahead, please.
I can add on to what Robert said. Yeah, Robert did say significant on the in-utility, particular for movie theaters. Well, I don't have the number directly in front of me. There's a number of studies out there, and you're looking at something in excess of 50% on that in-utility, that external obsolescence factor.
And we have a question here from John. Since the first half of the taxes are due on 4/1, will there be a refund afterwards, or how does that process take place, Jeff?
Okay, so as far as the taxes, we're looking, any reductions we do are prospective in nature. So they don't affect the current tax year. They'll go into effect for the upcoming tax year. That's the tax year that runs July 1st through June 30th. So if you're granted a reduction in your assessed value and therefore your property tax, you're looking at seeing that reduction on your December 10th, 2021 installment and your April 10th, 2022 installment. It will not affect any taxes that have already been billed.
Great. For possessory interest properties, is the discount rate that was a typical 9% to be increased due to risk? And if so, do we have a percentage that the office may be using?
Hi, Jordan. The discount rate, varies depending on the type of property. Unfortunately, right now we're still analyzing the data, and we haven't really pinpointed, what the effects are on the discount rates. Once we commence the Prop 8 reviews, and my staff, my possessory interest specialist reviews all the market data, and then they'll make that determination.
Thank you, Albert. One of the questions that we're getting here from the property tax advisors is, if you do not submit an application, will our office still review your property? And so I'm really glad that you asked that question. In 2010, when we had the market crash, we did some modeling and did some across the board reductions from our office on over 300,000 parcels across San Diego County. Unlike that situation, it appears COVID-19 is impacting each industry, each parcel, and even each unit or store differently. And so unlike 2010, where we saw an across the market, impact on parcels and property values, here we're not seeing that. Interestingly enough, some grocers are making 2 or 3 times what they did pre-pandemic, and some are making 2 or 3 times less. And so because there's a disproportionate impact on certain industries, and even within industries, certain areas or certain types of stores, we're not able, and our modeling doesn't allow us to just do a straight reduction, except as Robert referenced in the business personal property tax. We will be doing reductions regardless of if you apply, because as he mentioned, you don't need to apply for that. But if it's for a possessory interest leasehold, or if it's for a fee simple or you own the property, we do need you to submit an application for us to review and qualify you for property tax relief. So that's a great question. Thank you so much. We have a question from Elliot, and it's a possessory interest question. Is the airport landing fee eligible for Proposition 8 reduction? And Robert, is it something, or Ray, you want to take a shot at that?
Yeah, if Elliot's referring to the landing fees that's charged to the airlines at Lindbergh or some of the smaller airlines, the formula that's used for that is a state mandated formula. So we're given the information from the state to calculate that formula. What would affect the landing fee is the volume of traffic from that airline. So in a way, the reduced traffic, if they had reduced flights, would be reflected as a reduction. But that's the only variable that we could really change that be reflected on the valuation is the volume of the traffic from the airline for the respective year. So the other part, it's a formula given to us by the state that really can't be changed.
So it sounds like, Ray, for this airport and the impact on our airlines and those folks, it's almost going to be an automatic application based on the reduction of traffic and using the state formulas. Is that fair? Or is there an extra application you think they might need to put in on that?
The landing rights for the airline, it's an annual review. So even if there is no property file, it would automatically be reviewed and would reflect the amount of traffic for that respective airline at that airport. So
great.
Yeah.
And I know, a lot of folks out there should know that when we do property tax assessments, it's actually a team effort. We work with other counties so that way we keep it uniform and we keep our application and we try to reach fairness across the state. So when it comes to the airlines, we actually divide up our review of airlines. And I think Robert even used to go and do one or two particular airlines for the other counties. And so I would say, Elliot, find the county that is the lead for your airlines. And I believe you might be able to get that direct question and your example answered directly from that county. Is that right, Robert?
Yeah, that would be a good way to go.
All right, next question is, should profit and loss statements be based on what was actually collected or based on what should have been collected based on lease terms?
Hi, Jordan. Yeah, it should be the actual income collected. In addition to that, if they can provide the rent roll that provides us the lease terms, the start end date, the lease rate, and the area's lease, and the list of all the tenants.
Great. Patricia Alvarez asked, the state has not yet passed an exemption for PP1 received. That's a lot of P's there. Sorry about that. Do you think they will pass this? Should I wait? I have a big amount and it will be important for our business. And Patricia, I appreciate this question. It sounds like this is an IRS or a question for the income tax. And so the question is, a lot of folks, I know a lot of small businesses are waiting to see whether or not the state will adopt the federal income tax rules. Unfortunately, this is property tax concentration here. And so I would say, you need to talk to your CPA. And I also know the San Diego Regional Chamber of Commerce is very active lobbying on behalf of small business owners to see if the state will adopt the same rules and have uniformity with the federal prescriptions on taxes. So I apologize, that appears to be a income tax question and not a property tax question. Next question we have is from John Boyle. John Boyle, another taxpayer representative that is works with our office quite often. Will properties be pending unresolved prior tax year appeals receive the same consideration and potential relief as properties without pending appeals?
I can go ahead and take that. Hi, John, how are you? If you have properties that have pending appeals right now, due to the extraordinary need for data from these property owners, we're not going to, and due to the complexity of the appraisal assignment this year, we're not going to be proactively reducing values, maybe like we did in 2008 with residential. So I guess what I'm saying is, when in doubt, fill it out. Fill out the application, get on the list, send the data that we're requesting. But in answer to your question, just because it has a pending appeal doesn't mean that we're going to review it this year without that application. We need the application and the data.
Thank you so much. Next question we have, we manage retail centers that have been significantly impacted with tenants closed for extended periods of time. Our landlords have granted rent abatements, concessions, and deferrals to keep tenants in place. How will you look at these impacts through a rent roll that might reflect the contracted rent per the lease? I think Albert Tapia is going to take a shot at this.
Yeah, so In this situation, that's why we need the income and expense statements. We're going to look at the revenue that's actually coming in and being received by the landlord. And that will take into consideration any rent abatements or concessions that we're giving. In addition to that, we're going to look to the marketplace and determine what the going market rates are as of the valuation date. That's what we're required to do.
So it sounds like, Albert, too, it might be worthwhile if they want to put an extra cover sheet on top that says, hey, by the way, please note the abatements, concessions, and deferrals, and make it easier for your team when they're going through that review process. So that way they can account for it up front as well and be cognizant of that while they're going through rent rolls. Would that be helpful?
Yes, any information that can provide us would be helpful. Information on the, on changes on the terms.
So please take the time to spell things out if you think it's going to be important for our team to calculate it, and make it easier for us to get there with you. We appreciate that. The next question is,
Jordan, if I could interrupt for a minute. One question that we had quite a bit through the presentation was, once I receive a reduction, how long does it last? And I wanted to remind all folks, if we hadn't made it clear in the presentation, that Prop 8 provides a temporary reduction in assessed value that will only last as long as the values are decreased. So what happens is, right now, as you know, under Prop 13, we reassess on a change of ownership or new construction. If you've been granted a Proposition 8 reduction, we will then review your assessment annually, determine what the market value of your property is annually, and adjust the assessed value upwards or downwards, depending on the market. At some point, this is Southern California, we're going to see the market value increase. And so your assessed value will increase in the future, but you'll always have your Prop 13 cap. There'll always be that amount that you cannot go over. And so there really isn't any risk to getting a reduction or filing for a reduction, but the benefit's only going to assist you in years the value's down. In years that when the values go back up, you'll be put back on the Prop 19 or the Prop 13 path that you would have been on had you never received the reduction. So there is no risk.
Jeff, one of the questions that we have on filing is, how can one apply for a review of assessment, and apply it for a supplemental tax assessment by April 30 if it's not yet received? So how are supplementals treated differently than the regular tax bills, which we've been talking about?
Okay, so the discussion we're having today about Prop 8 is the valuation as of January 1. If there's been a supplemental event, for instance, a change in ownership or new construction, and let's say it happened on January 2nd, well, that's going to bounce against the prior value. So if you have a January 1 value and you get a reduction, but then you sell the property and you get an increase, they're going to kind of cancel each other out. So what you need to keep in mind is that we're only looking at the value for these purposes. We're only looking at the value as of January 1. Supplemental assessments, new construction, change of ownership will be handled separately from that.
The next question we have is from Property Tax Advisors, and thank you again for this. San Diego County is the first county to be providing this Prop 8 COVID analysis application model, and will other counties follow? Jeff, I'll let you take a cursory answer, because I think one of the problems that we have is we can really talk for San Diego County. This is where we take care of you here. We want to make sure that you have the answers. And within the rules, there's sometimes little tidbits that go left and right a little bit and little variation. So we hasten to talk for other counties. But Jeff, I'm gonna let you take a little answer there.
Yeah, and all counties can do this process. Now, San Diego County, and yes, I work here, but San Diego County has a history over the last 30 years for me of trying to be proactive and reaching out to taxpayers. It's about doing what's right and what's fair for our customers, for the taxpayers of San Diego County. Not to say that that's not what all county assessors want to do. But in any case, this is This process of reviewing assessments under Proposition 8 is something that's available in all the other counties. What's different is their timelines. For instance, we have a timeline that runs from a filing date that runs from December 1st till April 30th. Some may have earlier cutoffs, some might have later cutoffs. You would really need to reach out to your particular county, wherever that property may be located, reach out to that county assessor and say, I'd like to file for a Proposition 8 review of my assessment for 2021. How do I do that? You'll probably find, I suspect that on a number of those county assessor websites, you're going to find information about COVID-related property tax relief.
Hey, Jeff, I just want to add to that. Yeah, I was on an email string with some other counties, and I think it's about probably 50-50. Some counties are being a little bit more proactive and reaching out to the community, try to get more information. But like you said, most of the counties should all have this process of filing a Prop 8. And I think the difference between us and maybe some other counties that are just being more proactive and reaching out to the community to encouraging them to give us the information to be proactive in making the reductions as quick as possible, so it will be reflected on their next tax bill. So other counties are doing it.
I want to give kudos to the leaders that everybody sees in front of them now. We spent the time, and really they spent the time running the models to see who might qualify for this Prop 8 relief, and then compiling a list for us to proactively mail out applications. So for those of you that received a letter in the mail, that is a testament to their commitment to helping you and property tax relief. I don't know if that happens in every county, but I can guarantee in San Diego County, that is our commitment to you, the taxpayers here. Somebody's asking if they have a personal residence and they've been using that for a year, their home office, while paying an office lease on their property tax. Is there any reduction there for them in that capacity? And Claudia, it seems like you might want to take a brief, I know this is a pretty straightforward one. I appreciate your comment on that.
Sorry about that. I was trying to get the mute button. As far as a personal property residence, I mean, we're looking at what is the market value of a single family residence on it. So for the question, I think that the taxpayer, the listener or the observer is asking, may be related to income tax purposes, where you can claim a portion of your residence on your income tax statement. If that's the case, that's what I'm thinking, because there's no reduction on our end that we can do for a house being single family being used as a home office. Basically, what we've been looking at is the sales data, the market approach, and what is the assessment for your residence, and what is the market value. And if the assessed value is higher than the market value, then we'll temporarily reduce it to the market value. In the residential market, we haven't seen a decrease. I mean, the values have continued to go up in the residential market. So we're really, for this property, it's available to residential properties as long as the market value is reflecting a reduction in their assessment. Again, COVID, commercial industrial properties have had the impact, and that's what we're focusing on.
And I appreciate you hitting on that. So just so everybody hears, Prop 8s are available in the residential market, but I'm sure everybody out there knows the residential market's been increasing during COVID, almost 10% year over year. And
Yes.
so while we do have a few Prop 8s out there on residential properties, and if you feel your residence does qualify, contact us and put the application in for it. But right now, from COVID, we've only seen it impact the commercial market for the lion's share. So thank you so much, Claudia. Next question we have from Wes Nichols is, how are you going to find market rent for restaurant space due to the fact that there's very little, if any, lease activity? We will be looking at sales and apply a 7% gross sales for restaurant lease rate. Will you be looking at sales and apply, say, 7% of gross sales for restaurant lease rates?
Hi, Wes. Yeah, so I understand there's very little activity in the leasing market, and I'm going to defer to my restaurant specialist. That he's going to analyze the data, but that is one method of determining rent is the percentage of revenue. We will look at that as well. We're hoping that we have enough lease data out there, but we will explore all methods.
Great. This is from Elliot again. Business personal property question. Many U.S. states would require taxpayer to provide an estimated fair market value for each item for business personal property tax, but California Form 571L states that it doesn't need this estimation. Is that correct, or only the original total tax included in the cost?
Yeah, that's a good question, and he's correct on the filing. That's right. We always require the full cost only. We never require market value estimations on lien date. That's what we're doing on our end, and I think he's trying to get at how we are determining the COVID percentage reduction, and also applying market value. And I think this goes back to, what Jeff was saying, that for the past 30 years, our goal is to get out in front of these issues. And we're looking at a few different factors and coming up with our percentage reduction by industry. And this is our best way to give relief to the businesses. And then if there's still an issue out there that needs to be resolved to get to what they believe is market value, we have the appeal process where we can still look at additional information.
And I appreciate you saying that, Robert. And just to remind everybody, this isn't a one and done process. We're going to be processing thousands of applications in a very short period. And so our staff is going to be working diligently with the taxpayer in mind to get to the fair amount. And so there's no ego attached to the work that we do, because sometimes we may have not gotten all the information that we need, or we need more information. And so if there's something that we need to do or continue the conversation, ideally, like Ray said, we want to get there with you and get you to a really happy place before the assessment appeals board process. And that happy place is that you're like, hey, I was treated fairly, and that's a fair amount. If for whatever reason you're like, hey, this wasn't accounted for, or maybe I didn't send this information and I need to send that over, we can continue the conversation in the assessment appeals process. It does take longer, it is more cumbersome, but we're there as a partner with you. And so some of the questions we got from like Steve Sharp was, can I speak with somebody about an asset that's under construction? Absolutely. And we posted the information, the phone numbers there before, and we're going to have the slide deck for you. Call us. We want to get there with you as best as possible and get you the information so you can make educated decisions that have a fair process with you in mind. And that starts with your education. We are partners in your education like we're doing today. We have a question from Chris Sohei. Market value for commercial property is computed by the income approach, not the comparable sales. Is this taken into consideration for a decrease of value reasons? And Ray, I know you answered that on the Q&A. Would you mind doing it for our audience?
Oh yeah, of course, Jordan. Yeah, we're going to look at all the approaches. Primarily commercial property when it's sold. That's the primary approach, is income approach. So with any type of appraisal, we're going to use the best information available out there, be that comparable, if it's a comparable approach, or a market approach, or income approach. So any type of approach, we'll be looking at the best information out there that's available, and that includes the income approach.
And Ray, is it fair to say that COVID has created kind of a weird market? We're not seeing the regular sales that may have happened because the market stopped because people didn't know it was happening in COVID, or we're not seeing as much turnover. So we have to use the multiple approaches in order to make sure that we have the fair number for the taxpayers.
Yeah, of course, Jordan. I think that's probably the understatement of the year, that COVID has changed everything and it's affected everything. So yeah, we'll have to look at everything a little bit differently, but the ultimate goal is just trying to reflect what the market value of that property is as of the lien date, which is going to be a challenge because of the, the decline in lease activity, sales activity. But we're going to do our best to put a fair value on there that reflects all the challenges that the commercial properties have come across this past year, and that's where our goal is.
And if I could add on to what Ray just said, and I know Albert mentioned it previously, is when a commercial investor invests in commercial properties, it's to receive an income. And that income isn't just for 1 year, that income is in perpetuity, or at least through a lengthy holding period. Just because values, just for instance, maybe in a hotel, just because values or room nights have decreased by 40, 50, 60%, that doesn't mean that the property value has decreased by 40 or 50 or 60%. There's not a one-to-one relationship between losses due to COVID in this last year and overall loss to a property value on the long term. So when we're analyzing values, we're really looking at the present worth of future benefits, considering what's happened the last year and the uncertainty that has resulted in the market.
And that's one of the reasons that the presentation today is so important, is we want you, the taxpayers, to know the rules that we have to operate by, set forth by the state of California and the legislature and the Constitution. So that way we have a realistic expectation of reductions, but also so you can help us get there so we can maximize it as much as possible. And so one of the questions that we got here, Jeff, was if a CPA conducted a recent business valuation, and that was one of the things that they have available to them, would that information be helpful to you and the team in looking at the future value, present value of a business and its leasehold or land value?
Yeah, and while I wasn't quite sure by the viewer if they were referring to business personal property assessment, basically the key is the more information you can provide us, if you feel that it's worthwhile to do so, if you feel that it will be helpful to this process, please provide the information. So if you had a appraisal because you were doing a refinance, or you had a recent valuation of all of your machinery or business equipment, provide that information. That's going to be really helpful in coming to, again, a fair assessed value for your property. And that's really what it's about. It's not about getting the highest assessed value. It's about getting the right assessed value. And so certainly provide that information to us.
And Jeff, I know we recently talked to a hotel that said, hey, we have this extra market data that we can send with, just so that way you can kind of see where we are in context or have some reputable reporting sources. Should folks send that in along with their data if it kind of backs up some of their calculations? Would that be helpful to you and Albert and Robert and Claudia and the team?
Yeah, absolutely. Absolutely.
Great. Claudia, one of the questions that we got, again, and I hope that you can help them, is where do we find the application?
You can find it on our website at www.sdarcc.com. And if you link to under Assessor Services, the online application, there's a link for the online application. Also on the forms section, there's a link. There's a link on our presentation that I know there's going to be a recording provided for those websites. I mean, I can go through them if you'd like me to spell them out, but we definitely have the PDF version also of the application.
Jordan, and we have a banner on the top of our, and we have a banner on the top of our website, so you don't even have to go that deep.
Correct.
Look at that rotating banner and click there for your Prop 8 application. And Jeff,
Yeah.
we're gonna take one last question here, and then we're just gonna wrap up. And the last question is, as a tenant responsible for the payment of property taxes, but not the actual owner, is there anything that we can do to appeal for a property tax reduction? Or does it have to come from the property owner? And what if the property owner declines to help? So actually, I'm going to expand that question. What if you're the tenant? Can you file? And what if you're the owner? Can you file on behalf of your tenant?
And I can say for this process, because this is what we refer to as our informal review of assessment process, anyone can really file for anyone. There is no downside of this. The application asks you to file, asks for contact information, but a landlord could certainly file for a tenant, or a tenant could certainly file on behalf of the landlord. Again, the key is that we want to get the value right. It's different when we get into assessment appeals. Assessment appeals is a much more formal process. There's a much more formal application and a lot of laws that govern it. And so that's what's different about this informal process and the formal assessment appeal process.
We've been asked to extend for 2 more questions. We're going to take these last 2 questions and then wrap up. For restaurants that were closed and reopened several times, would we have to show the total decrease in sales from 2019 to 2020? And we know we have a lot of restaurants in San Diego County that are hurting.
I could take that question, Jordan. Yeah, I think any information will be helpful. And this kind of leads to the next question I think John Boyle put on there is we'll be using a discounted cash flow. And it kind of goes back to what Jeff was saying, so we're going to be looking at the value of the property, because there's a historical decline in, I think, revenue and rent this past year. But like I said, it doesn't exactly equate to a 50% decline in value because there's 50 decline revenue. So, in situations like that, we'll, the question was asked, are we going to use a discounted cash flow for this type of analysis? Discounted cash flow typically is helpful when there's uneven cash flow going forward. And this could be a situation where discounted cash flow would be utilized even, for these type of properties, because you're going to have a lower revenue rent the next maybe couple of years to come up with the value. I think the question that was being asked is how long are we going to use diminished revenue or rent for a discounted cash flow, and that's kind of, I think, depends on the property. That's something that the commercial appraiser that's going to be valuing the property has to determine. But I would say in a situation where there's anticipated uneven cash flow in the future, a discounted cash flow would be certainly a way to look at it, because it reflects the current year or two where there's decline in revenue, but also as an investor, you're going to be anticipating higher revenue when things normalize, and that should be reflected in the value as of the lien date.
And for the restaurant owners, we know that you've been impacted heavily. We think the profit and loss statements will reflect those closing periods. So we think that will be accounted for that. And so for the folks that are just putting in the application for their little restaurant, let us, for their smaller restaurant, not a chain, hey, you know what, that profits and loss statements, let us know when you've been closed. Put that on the cover sheet so we can account for it, but also know we feel comfortably that the profit and loss statements and the cash flows comparing 19 to 20 will allow us to also reflect that reduction from when you were shut down by the government. And so we want to make sure we're accounting for all of that. Okay, the last question for the team, and then we're going to wrap up with some thank yous, is from Joseph Saed, who is a commercial realtor and also helps with some folks' property tax appeals. Let's say a building owner successfully applies for and receives a reassessment or appropriate reduction that results in a lower valuation or tax bill for this year. This is a great question. If over the next year, the market value of the property goes back up with a higher figure than it had before the reduction, will the assessor's office automatically raise the assessed value to the market value of this property? Since one can assume the owner of the property will not voluntarily have their property value reassessed to a higher figure. So does it get reassessed? The answer is no, but does it get reevaluated, whether that reduction still applies? Jeff, do you want to close us out here with that answer?
Yeah, certainly. And we covered that a little bit ago as well. These are temporary reductions. Once you receive a reduction, we reevaluate the property on an annual basis and adjust it for that upcoming tax year, whether that value has gone down further or whether it has started increasing. So there's going to be an annual reevaluation. You keep your Prop 13 cap, and that Prop 13 cap is running in the background and going up that 2% per year, every year inflation adjustment. But the reduction that we do is temporary, and we will automatically, because it's a temporary reduction, we automatically will be reviewing it on an annual basis. So whether you think it's gone up or down, you don't need to file it again once it's been reduced.
Well, I think we're coming to the end of our session. This is not a one and done. We put our information out there because we want to continue the conversation. We want to be a successful partner in your education and a successful partner in your property tax relief. This is really important to our office and our boss, Ernie Dronenberg, not only as your elected assessor, recorder, county clerk, but also as a small business owner himself. And so we are here to help you. I want to thank you so much for the San Diego Regional Chamber of Commerce, Katie, and the rest of the team for being an amazing partner and offering us this platform to connect with your business owners as part of the chamber and all of our other partners that have been with us to help us reach your membership at this important time. We know every penny is going to count, and we want to see you successful and thrive here in San Diego County. Thank you so much to Jeff Olson, Claudio Urbano, Albert Tapia, Robert Vaughan, Ray Kim, our amazing experts from the San Diego County Assessor Recorder Clerk's Office. If you've got one thing, you have a great team and great partners here at our office that are ready to help you. And it starts first with getting that application in early, getting us as much information as possible, and know that we are here. Tell a friend. It's better to get an application in, give us that opportunity to help, and we're here to get to the right fair amount. You know, our office doesn't thrive on how much money we bring in. We thrive on getting great customer service and getting the right answer and the right fair amount, and making sure that you as a partner thrive here in San Diego County. So thank you so much, and wish everybody a happy Friday. And we look forward to your applications and helping you with your COVID-19 application.
Thank you very much, everyone.
Thank you. Bye.
Thank you.
Thank you.